Okay, so I was looking at some financial results, and it seems like BPCL, Bharat Petroleum, had their board meeting on January 22nd, 2025.
Yeah, that's right. They released their unaudited financial results for the quarter ending December 31st, 2024. It's quite a bit of data, actually.
Right, it's a lot. They even sent it to the Bombay Stock Exchange and National Stock Exchange, all the official channels.
Of course, they have to. It's all part of the compliance and disclosure requirements, especially being a listed company.
So, what's the main thing? What do the numbers actually say, about how they're doing?
Well, their revenue from operations, so the main business activities, is at 1,27,520.50 crore rupees for the quarter, which actually is a slight decrease compared to the same quarter last year.
Oh, interesting. So a bit down from the 1,29,946.95 crore rupees in 2023, right? But how about their profits? Were they also down?
Actually, their net profit for the quarter is at 4,649.22 crore rupees, which is also down from last year's 3,397.27 crore rupees.
Okay, so both revenue and profit are a little down. That's a bit concerning, right?
Well, it's not all doom and gloom. They've still made a profit, and there are fluctuations, in these markets. Let's see. The overall total income for the quarter is at 1,28,349.04 crore rupees.
Okay, so the total income includes revenue plus other sources, right? But where does all this money go about expenses?
Their total expenses for the quarter are quite high at 1,22,172.87 crore rupees. The major expense components were cost of materials consumed and the purchase of stock in trade, which makes sense given their business.
That does make sense. So the cost of raw materials and buying stuff to sell is what's taking up a huge chunk, right?
Exactly. And you've also got things like excise duty, employee benefits, finance costs, depreciation, and other expenses to account for. It's like managing a huge household budget, but, on a much larger scale.
Right. And I see here they had an exceptional item, an expense of 1,798.02 crore rupees. But it seems that was from the previous year. Why such a huge one-time expense?
Yes, that was actually from March 2024, an impairment loss, on an investment in a subsidiary.
Okay, so not something that affected the current quarter, just something from the past, which is good to know,
Precisely. That was a one-off, and it's important to separate that out from their usual quarterly performance, right?
Right. So moving on, how about their physical performance? What kind of numbers did they put up for that?
So their refinery throughput is 9.54 million metric tons. Market sales are 13.43 million metric tons. And they also did some exporting, around 0.26 million metric tons. So their overall sales growth was about 3.95%.
Okay, so they processed 9.54 million metric tons of crude, sold 13.43 million metric tons in the market, and exported some too.
Right. Those numbers indicate that their operations are, pretty substantial and running steadily given the circumstances.
And I saw a note about the average gross refining margin, or GRM. What's that and what was it?
The GRM is basically the difference between the value of the refined products and the cost of the crude oil. For the 9 months ended December 2024, their GRM was $5.95 per barrel.
So a lower GRM means lower profits on the refining side, right? Is that good or bad?
Yes, it's lower than last year's 14.72 cents per barrel for the same period. This is, impacted by the additional excise duty and infrastructure cess. Actually, that was levied.
Okay, so it's a mix of market conditions and government taxes, it seems, that impacts their overall margin. Well, I guess that's how it goes, huh?
Exactly. Various external factors affect these numbers. They're not operating in a vacuum.
Now, let's talk about the shares. They issued bonus equity shares. Is that correct?
Yes. In June 2024, they issued bonus shares in the proportion of 1 for every 1 existing share. So basically doubling the number of shares, and that's why the EPS, earnings per share, is restated for all periods.
Right. So that means every existing shareholder received an additional share for every share they owned. And I see they've also declared an interim dividend of 5 rupees per share.
That's correct. The board approved that interim dividend, and it's good for the investors, a good sign they are looking out for their shareholders.
That is good news for investors. And the record date for determining eligibility is January 29th, right? It's like a small bonus for shareholders, I guess.
Yes, anyone holding shares on that date is eligible for the dividend. It's a nice little, payout for investors.
And it seems they have a consolidated report too, with all their subsidiaries and joint ventures included. How are those numbers looking?
Yes, the consolidated revenue from operations is 1,27,550.57 crore rupees, quite similar to their standalone, right? And the net profit is at 3,805.94 crore rupees.
Okay, so revenue is similar, but profits different. And it seems their exploration and production segment is a bit, all over the place with some losses.
Well, that segment is showing a loss before tax, other income, and finance costs of 411.09 crore rupees for the quarter, whereas the downstream petroleum was at a profit. It's like a mixed bag, really.
Right, a mixed bag indeed. And they also mentioned something about a force majeure at Bharat Petro Resources, their subsidiary in Mozambique. What's all that?
Ah, yes, that's a key issue. Due to the security situation in Mozambique, the operator declared force majeure back in April 2021. This has led to some exceptional costs. They had to expense off.
Okay, so a security issue forced the shutdown of operations, leading to incremental costs and impacting their bottom line.
Exactly. And this force majeure also led to suspension of interest capitalization. So that's interest on loans. And that further impacted their finance costs.
So a double whammy, right? Extra costs and finance charges. I mean, all due to an unforeseen external issue.
Right. It's a tricky situation, and it shows the complexities that companies, even large ones, have to deal with in these global operations.
Well, that's quite a summary of the financials. It seems they're facing some challenges, but they also have a very robust operation and a dividend for the investors.
Yes, they are navigating through a mix of market challenges, operational expenses, and external factors. But hey, if you are enjoying our content, don't forget to like, share, and subscribe to the channel.
Yeah, definitely like and subscribe, folks. So overall, it feels like BPCL is still, quite solid, but facing some headwinds. What are your final thoughts?
I'd say while the results show some decline, their core operations are still quite strong. The challenges they're facing are a mixture of global conditions and one-off situations.
Right. It's important to look at the overall picture and see how these companies, adapt to different situations.
Yes, and it'll be really interesting to see how they perform in the next few quarters, given these, circumstances.
Yeah, definitely. And what steps they take to improve profitability. So what do you think the impact of these results might be on their stock price in the short term? Any ideas?
Well, that's always the million-dollar question, right? The markets will have their own, take on it, depending on the information and how they see the future prospects for BPCL.
Right. It's all a bit of speculation, isn't it? And that's a discussion for another time, I guess.
Absolutely. We'll keep an eye on it and maybe do another breakdown later on. But for now, that's all for today.